Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on May 26th, ahead of the long weekend. I hope everyone has a good Memorial Day weekend. Our offices will be closed on Monday, but we'll be back at it on Tuesday with a normal schedule from there on out. Cabot Top 10 Trader subscribers, you'll get your issue on Tuesday evening, which is par for the course after a holiday. Okay, into the market. It's a very interesting and unusual situation. You literally have, at this point, talking right now today, May 26th, relatively few number of stocks doing well. That is tended, driving the NASDAQ higher. Underneath that, you have some other leaders, sort of non-AI leaders, let's call them, that are acting well, but not, shooting higher for the most part. And then you have wide swaths of the market, and not just financials, but just all over the place. Literally almost 2/3 of stocks are still below their 200-day lines, that sort of thing, that are acting poorly, okay? So it's still kind of the same thing. The intermediate term trend model that we use is actually closer to turning negative coming into today than it was turning positive, even though we've seen some stocks pop. Now, with that said, I do want to say a couple of positive things. Number one, just sort of stepping back, the AI thing that's going on, it's early, first of all, just so you know. And second of all, this is the sort of new, potentially revolutionary thing that markets can latch onto, and it can launch a bull market or at least a sustained run in a ever broadening group of stocks. So it's just something to keep in mind. If you're not in any stocks right now, don't say, oh, geez, I missed it. I wouldn't say that at all. Keep an eye on them. Number two, in terms of the market, I am seeing defensive stocks sell off. Some of that's because of higher rates for sure, but I'm never that unhappy when defensive stocks sell off after a pretty big run and the NASDAQ is strong. And number two, like I said earlier, there's sort of a second layer of potential leaders that we talked about that spent February, March, April chilling out, kind of breaking out, gapping up on earnings, doing pretty well in May, and then they have pulled back this week, but not abnormally. So I want to see if these things can hang in there. They look normal so far, and then resume their uptrends. Hey, that would be a little bit of a character change. If they just kind of keep sliding and come right back down to earth, that's sort of still the washing machine or meat grinder environment. Okay, we're still seeing quite a few potholes out there, air pockets, whatever you want to call them. But let's see how it goes, because there is quite a few stocks out there that look good, broke out, haven't set the world on fire. They're not AI stocks, so to speak, but they act well. And if they can resume from here, I wouldn't mind putting some money to work. For the time being, I'm still quite cautious when it comes from a growth investor's point of view. If you have some of these tigers by the tail, great. Hang on to them, or maybe take partial profits, but hang on, sort of thing. But in terms of putting a ton of money to work in a wide swath of stocks, the environment just still isn't there yet. I wish it was. I think it can change. I don't want to go too much on a tangent, but just so you know, things are thin now, but that's descriptive. To me, it's descriptive, not necessarily predictive. Coming off the pandemic bottom, which this is not, this is a different situation, but coming off that bottom, it was not this narrow, but it was still a pretty concentrated advance in the work from home stocks and technology and stuff like that. It wasn't this narrow, but that was really what went up for the first month or two of the market. And then things started to broaden out. And of course, the vaccine rally in November of that year, it really broadened out, okay? So don't, today is today, next week is next week, the week after is the week after. Just take it day by day and see how it goes. Right now, the evidence tells us that things are still narrow, okay? So I wouldn't be piling into stuff, but I will say if some of these other leaders hang in there, which are at pretty attractive entry points or getting there, can hang in there and kind of resume their advance in the next few days, couple of weeks sort of thing, I think there could be some money to be, can put some money to work. Okay, let's see how it goes. All right, enough of me talking. Let's dive into the charts. As usual, I'm using MarketSmith, product of Investors Business Daily. You can learn more at marketsmith.com. So you can see the NASDAQ here had pulled back pretty sharply, but then we had the NVIDIA report on Wednesday night, I guess it was, so the Thursday reaction, and now we're seeing this is early follow through so far. Okay, NASDAQ's up a couple hundred points, 1.5%, let's call it, okay? Looking at the rest of the indexes, let's see how it develops, but as it stands right now, the S&P 500 still hasn't been able to get going, okay? And this, of course, is still influenced by a lot of those mega cap stocks. And then again, when you look at sort of the IWM and all this, these things sold off, and they are up so far today, you can see, but there's just nothing doing. They're not, they're not sinking down here, but they're just kind of, if you just came in and looked at the IWM, you wouldn't think anything really happened this week, right? MDY, mid caps, same sort of thing, okay? And the New York Composite has actually, of course, this has a little bit more oil and stuff like that in it, but still, it's a pretty broad index. The New York Composite actually hit, fresh 2-month lows this week. And similarly, if you look at the RSP, which is the equal, I always say unweighted, but equal weighted S&P 500, like all 500 stocks, they're all big caps, but they're all equally weighted, as opposed to Apple being, whatever, 10% of the index or whatever it is. This actually did nose to 2-month lows as well yesterday, although it's reversed a little bit higher. But you can just see what I would just say is these things are in no man's land. They're not terrible. They're just kind of in no man's land, as opposed to, say, the NASDAQ, and really the NASDAQ 100, and really not even the NASDAQ 100, because if you look at the QQQ, which is the NASDAQ 100, it's $19.99 out there. Not really, but it's very, very strong advance, and that's a good thing. I'm not trying to make that into a bad thing. But if you look at the equal weight NASDAQ 100, QQQE, it looks good, but it's kind of like the S&P 500, sort of just near the top of this range. Can it get going? Maybe today's the day. Maybe I, come in next week and say, it turns out Friday afternoon before Memorial Day was the breakout for all these stocks. I hope so. I'm all for it. But so far, it's still just a very, narrow environment, okay? Moreover, when you look at sort of the quote unquote, it says, well, Mike, these are all growth stocks that are going. Well, this is small cap growth. Doesn't look that hot. This is the IPO fund, okay? Some improvement here. We talked about these last week. But, this week certainly took its lumps up today. But, nothing, again, kind of in no man's land. What else did I write down here on the, FFTY, which is the IBD 50 fund, which is kind of, strong relative strength, nice earnings growth, that sort of plays. Just still kind of range bound. If you want to look at ARK, this one did have a pop, recently, but kind of came back in. Again, just kind of in no man's land. So we'll see how it goes. Not that I'm not keying off ARK at all, but just this sort of action here, we've seen a lot of this, and now we've kind of come back, okay, just recently. This is, of course, after coming down like this. Can we hang in here around these moving averages or whatever you want to say, the support area? And now we start powering ahead from here, not just, a few stocks in the top of the NASDAQ 100. Okay, then you might have something to work with. That's really kind of what I'm keying off going forward. But so far, it's still kind of this narrower environment. Now on the flip side, okay, XLP, to me, this is finally noteworthy. We said it was kind of sagging a little bit here, but no big deal. Now it's kind of, I don't want to say come unglued, because maybe maybe it runs right back up, but it's clearly notable weakness here. XLU, which is utilities, and I've mentioned these last week too. XLV, which is kind of defensive healthcare, sort of safe healthcare for the most part, right back down. So now a lot of that, people will say, is because of interest rates. And I will say, not to throw too much at you here, because I don't trade on interest rates. I watch them, I know what they're doing, but I don't doesn't affect my decision. But with that said, the 10-year note has gone up here 50 basis points in the last 3 weeks. Nobody's talking about it. I'm sure that's having an influence on some of these interest rate sensitive sectors, of course. But to me, it kind of is what it is. You've had XLP, you had rates go from 0 to 5.5 or whatever the hell they are over the past, 2 years, and XLP almost didn't go down at all, right? So it's interest rate sensitive, but it's also doesn't have to be. And clearly you're seeing a sell-off here as money is starting to chase other things. And the question is, does that money chase, those 10 stocks, or does it broaden out to, a couple hundred stocks and the number of new highs expands and stuff like that, okay? The last thing I want to mention is just we are still seeing, and I got an email about this morning, here's Snowflake. I was going to write about this. I think I had written about it in CGI. I've been watching this since back here. It kind of had this, it was sort of this 3-week thing off the bottom with an IPO is almost a little bit of a buy signal. We mentioned it way back here, had a run. And obviously it died during the bear market, but I was going to mention it, nice bottom. I think I've mentioned it on this video. Setting up well, has got earnings, and what happens on earnings? Boom, just kind of dies. Another example, which isn't on earnings, is Lulu. Okay, I mentioned this. This right here was a huge earnings gap, and I won't show you, but take my word for it. The weekly volume was the heaviest that week since 2019, very decisive. Not quite, a true breakout, but clearly noticeable. And then the stock acts very just tight and well and proper, not setting the world on fire, but starts to stretch its legs here and then just unravels. Okay. And retail stocks have been weak. That's part of it, but just unravels. And so you're still just seeing a lot of this one step forward, one or maybe 4 steps forward, 4 steps back sort of action, or air pockets, stuff like that. So when that's going to be a big thing too, when you stop seeing, okay, the thing gapped down on earnings, it gapped down 4%, as opposed to a gap down 18%. Okay, that's going to be sort of a big difference going forward. But until proven otherwise, it's still kind of a minefield out there. Okay, now into individual stocks, there's a lot to talk about. First of all, I just want to say, like I said, the AI stuff, if you're not in it, oh God, I missed it, and all this. Some of these stocks, yeah, you probably did miss. This is SMCI, super microcomputer. I mean, I don't know where this ends. Maybe it goes to 300, I have no idea. But I do know that if you own it, I would probably wring some profits out up here. Okay. There's no question it could be up another 20 points before the end of the day. Who knows when you get some momentum going. But at the same time, it's kind of like, the AI story isn't brand new. It didn't just pop on the scene. The stock is up more than 100% here over the last few weeks. So if you do own some of these things, ring the register. Same thing with NVIDIA. NVIDIA is definitely, probably the number one liquid leader, I guess, of the market, right? At the same time, it's been running straight up since the beginning of the year. That's okay. It's only been 5 months. It could keep going. But, you're dealing with a stock that is extended here. It's obvious and all that. My guess is some of these things will go higher. And then not like Lulu, I don't mean it's going to fall apart, but, it might go higher and then kind of, end up back here sometime in the weeks ahead, sort of thing. That's a total guess on my part. But keep an eye on these things. Some of them might pull back for a month and set up again and have a new product and, or there's going to be other sort of AI plays within the network infrastructure. These things tend to keeps building out if it's the real deal. Okay. So I just wanted to say that because I have heard from a few people kind of, with that in mind. This is still, if this is the real deal, this is still, first inning sort of stuff. In terms of outside this, but, could be chips and all that, just a bunch of names, some of them big, some of them small, some of them whatever. So this is ASML. I mentioned this. It kind of looked like 700 was going to be some resistance. It pulled back here. And then, big volume yesterday with the chip sector following through so far today. And this is just a nice, forget AI and all that. This looks like a bear market, an initial rally, and then a proper base building effort finally. This is usually what happens. It doesn't go down here, build a base down here and get going. Boom, it rallies back to some extent. Then it builds a proper structure that's really an accumulation structure, and it breaks out on the upside. Hopefully I'm not going into too many details here, but anyway, 2 weeks now of accelerating above average volume on the breakout. It's a $700 stock, but institutions don't mind, so you shouldn't either. Similarly, high price. This is ServiceNow. I don't know. They probably have some AI thing, but it's an old leader, but it's a proven, it's really a blue chip at this point. Again, you bottomed out, you had a rally, and then you had a more proper structure here for 2 or 3 months, and now you're seeing a breakout last week and a nice follow through this week on pretty good volume. Yeah, a very good volume yesterday, very good volume. Again, would I go chase these things up here? It's up to you. Maybe maybe it's a good time to chase right here and they're not going to pull back at all. They're not going to pull back and give you the perfect entry point. But at the same time, you can make that judgment. But I'm just saying, after a nice base building effort and obviously the bear market, solid breakout there. MongoDB, I've mentioned this. This is databases. So again, you have the bear market, kind of a choppy rally. This was always a very hectic stock. Even when during this uptrend, I never played it just because it was down 40% and back up and all this stuff. But MDB, it might, maybe it's grown up here. Nice breakout a few weeks ago, follow through. And this is one of these names that, like I said, it's not, NVIDIA or whatever gapping up 1,000,000%, but it's handling itself quite nicely. I mean, it just had a straight up run here for a few days, and now it's chopped around. It's pulled back, tested you a little bit, but looks fine. Well above the 25-day line, looks fine to me. Okay, Inspire Medical. Of course, this is medical. Medicals, some biotechs have weakened, but you had I've mentioned this, the clear breakout, number one, the new relative performance high, and you did have volume selling here a couple days ago. Hey, maybe that's the top, I don't know, but at this point, it just looks like a normal sort of trend knockout day. It was a bad market day and that sort of thing, well above the 25-day line and kind of stabilizing here. Maybe it can get going from here, but overall looks fine to me. HubSpot, kind of like, I guess not like Mongo. I was going to say it's like Mongo in that it's been chilling out here for a few days, but extending to new highs today. Full disclosure, we took some partial profits today in Cabot Top 10 Trader, the update. We had gotten in here somewhere back in late March. But, it's extended here. But my point is, nice breakout, and you're seeing this follow through and no real, major dip from there. Okay. There's a lot. Uber, I've mentioned, kind of came straight up here with this huge volume after earnings. Reversed on Monday, kind of came down. Oh, geez, is this going to be this sort of thing again where it just kind of gives up the ghost? It's always possible, but to this point, what I like here is that you have these two back-to-back, really, 3 or 4, but after earnings, 2 back-to-back huge volume days. So I would guess that this area would be, in the near term, pretty good support for the stock. So, but anyway, my point is totally normal consolidation. And hey, maybe today's that day I'm talking about. We've had this sort of few days, week or so of consolidation in some of these stocks, and maybe it's time to resume. But either way, pretty normal so far. Celsius, CELH, went nuts on on the weekly chart. It's been frustrating because we owned it some back here and it didn't work, obviously. But it kind of, I think, had declared itself there. It came all the way back from this huge correction, kind of declared itself like, hey, I want to be a leader again, right? Good, the Pepsi deal and all that stuff. Kind of a little bit of a, not the perfect base, but tried again, fail. Corrected here, finally tightened up here. You can see it kind of get a little tighter and took off. So it's I don't want to say decisively, but it's above this sort of resistance area, call it 120, give or take. But now it's pulling back here. You can see there's been a little volume, but it hasn't been anything crazy, especially compared to the buying volume. And, I don't know, looks pretty good to me, totally normal. Maybe you come in next week, it's down 12 points. It's possible in this environment, but the longer it hangs up here with these names that really go up, the longer they hang in there, the greater the chance that they're going to resume the advance, okay? Biotech, I had mentioned, is it's taken on some water, but ITCI, this is intracellular. Listen, it's a money-losing biotech, but very fast. They have a blockbuster drug, very fast revenue growth. But you have this run for, call it a month and a half. Again, kind of noses to new highs, sort of. And then what do? You pull back. That's kind of par for the market. It's been a little sloppy in here, but kind of right to the 50-day line, not a lot of volume. How you want to play it is up to you. If you want to play it is up to you. Maybe you wait for a resumption sort of thing, but it's a decent pattern so far. SHAK, now this does have, I think, an activist investor involved. That's what I wrote, so I hope that's right. But I mentioned this, how it had this, again, bear market, bottoming, had a rally, proper base structure, launching pad structure, or whatever you want to call it, big breakout. It did pop on this news short term. This was the activist investor, and it's fallen off here. Retail stocks, again, are kind of iffy. But really pretty normal in here, no really overwhelming volume. And if it can kind of stabilize in here, it looks fine. Not hard to find names. Palo Alto Networks, this looks pretty strong here. This has been, again, it held up very well during the early stages of the bear market, finally gave up the ghost, but, held up, a little bit of a shakeout, came back, and then again, you have this sort of up and down, it's been tedious, right? Doom, all this stuff. It did come back here, shake out. It gapped on earnings. Finally, it looks like it's broken out above this resistance is what I'm trying to say here in the last 30 seconds. Okay, big volume there. Let's see what happens. Who knows? Maybe it reverses, but we're starting to see more of these breakouts. We're still starting to see we still see some breakouts fail, but we're starting to see more breakouts stick and some follow through. Some of those are the AI chips and stuff like that. But even here, you're starting to see a little bit of follow through on the upside as opposed to, here's the resistance, it breaks out, and then it just kind of, fails, pretty quickly. We're starting to see some more follow throughs, which is good. Even in transports, this is a little bit of a special situation, but this is XPO, this is just XPO, they call themselves now, but gone through a ringer, sort of a transformation, longer story, but it's been in top 10. Big turnaround here, earnings and some other news, and you can see it's tightened up here on the 25-day line. That looks good. NXT, this is the next tracker. This is the recent solar IPO. Flex actually spun it out. All in all, it's sloppy, but it's sort of, it's volatile, I should say, but I wouldn't say it's sloppy. That's what I want to say. So holding up pretty well. Again, it's an IPO breakout. These things aren't the be-all, end-all, but so far so good. This is NXT. Take-Two, video games, never been my cup of tea just because the numbers are so lumpy. But next year looks like it's going to be fantastic for them and some new launches coming. And the stock actually has had some, we used to call this positive momentum, where it outperformed the market for a certain number of weeks, certain number of months, really. And the stock really popped last week and is holding those gains. Okay, so it was a little sloppy this week outside of the AI stuff, but the stock's held up pretty well in here, so that looks good. Couple other here we got, or just one more here. We got Netflix. I just want to mention this again. The stock did, if you're kind of a, IBD person, cup with handle, whatever you want to call it, you've had this bear market rally. Here's kind of your first sort of proper structure. And then you get the breakout last week. It does still have this old overhead. And listen, Netflix is, they do have a new ad-supported thing. So maybe there's a new leg to the story. Maybe not. Okay, but I'm just flagging it as sort of a mega cap, liquid, $160 billion market cap name that, the more the merrier sort of thing. So it's holding in there pretty well. Looks like a pretty normal consolidation. Let's see if it can follow through to the upside. So, outside of, NVIDIA and Supermicro and whatever, Marvel today was another one. They said AI in their conference call and look at the stock go wild. So don't get me wrong. I'd love to have those. And if you do, that's great, and maybe take some partial profits and see what can happen. Maybe these stocks, maybe Marvel's the next, NVIDIA in that sense, or demand's going to go through the roof here in the next few quarters. But for the most part, you can see even outside of that, you still have a lot of names that are acting well and that have either are starting to follow through maybe today or are consolidating normally here the last few days. And if they can follow through from there, again, you're just kind of putting a few of these bullish or at least more encouraging breadcrumbs one by one. And if we can start to see more of these breakouts follow through on the upside, it should be good. So overall, I'm cautious. It's funny because it's like I'm holding a ton of cash. So I don't want to I'm not going to go around sitting here saying I'm bullish, but I really am, I've said to you where the evidence is kind of on the edge of a knife, or it's right on the fence there where if things go right, there could be a lot to play with. I wouldn't say it's totally done that because again, it's been a very, very narrow environment. But if we start to see a lot of these things and it broadens out, I think, it could be game on. Okay. That's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review, which hopefully will be very interesting and ideally very bullish if things work out well. Have a great long weekend.